What is going on, everybody? It is the Naughty Investor here, and I am here with a special guest on the channel. Would you like to introduce yourself?
Hey guys, this is Andrei from the 1 Minute Economics YouTube channel, and yeah, I'm kind of here. This is as a bit of a secret. This is the eighth collaboration I'm shooting today, and I'm essentially all over YouTube. I'm going to be on the podcast scene as well with the launch of my new book because many have gotten to know me as kind of the economist dude on YouTube, and it does come with a certain responsibility, and I didn't want to be left with this feeling of guilt for having had certain concerns but choosing not to voice them because it's never a comfortable thing to do. So essentially, I've kind of decided to do the exact opposite. I've written a book which is called The Age of Anomaly. And since I know my audience, I know that it's probably going to be the only book about financial preparedness that they're ever going to read. I did my best to kind of write it in a from A to Z manner. Like some of you who know me from the channel, I'm a pretty hands-on guy. Like I put a good balance between, academic stuff, your bachelor's, master's, PhD, but also real life. Like when it comes to crypto, for example, I don't just study crypto. I trade it on 17 exchanges. I've done arbitrage in South Korea, or even now I do have open positions. Even if I don't follow many pairs because it's not my main source of income, I do keep my ear to the ground. And the same principle, I have real estate positions here in Romania. I like to be well connected with reality. Also, I started out as an entrepreneur. I have business experience as well. And it's kind of this weird set of skills that enables me, I think, to put an authentic perspective on the table. And in my books and my YouTube videos, I do my best to give people kind of a hands-on approach. I focus less on defining and being this boring, arrogant economist who talks down on people, on people. And instead, I just try to kind of act as a friend who just so happens to be good at economics. And fortunately, at least so far, it's working.
All right, great introduction. So we're gonna start off. We're gonna talk a little bit about the current financial situation, and you could grab, things that were in your book and stuff like that. Talk about that, and then we will, towards the end of the video, we'll move a little bit more into crypto and ways to protect yourself. Different opinions, but it's great. You're diversified. You own some, real estate stuff, some crypto stuff. That's always great to hear. I mean, diversification. You don't want to put all your eggs in one basket. So, what do you think the problem is with, or if there is a problem with the current economy, is there overvaluation? Is there bubbles forming? What do you think on the current situation?
Now, first and foremost, what I tell people as someone who even trades crypto on leverage, I'm not exactly the type of person who's easily spooked by, let's say, a 60% crash in the stock market. So, right off the bat, I try to make it clear that I'm not afraid of a stock market crash or a real estate crash. Those are cyclical in nature, it's just a business cycle, nothing special about them. What I'm afraid is what happens next, because essentially the problem has been this. If we take not one step but two steps back and look at the dot-com bubble, what I'm afraid of is a major change in narrative, because the narrative so far has been, yeah, you had the dot-com bubble that crashed, people were panicking, but don't worry, central banks and governments have it all under control. And indeed, they quote unquote saved the day. They lowered interest rates, the economy was jump started, but this came at a cost. And that cost was the inflation of an even bigger bubble, the real estate one. That, as we all know, popped. Once again, the narrative prevailed. Don't worry, don't panic. Governments and central banks are here to save the day, except the market demanded an even bigger dose of stimulus. So over in the US, interest rates were brought down to zero. Here in the European Union or over in Japan, they went negative. And even more so, from 1913 up until the Great Recession, so in almost 100 years of central banking in the United States, the monetary base had reached 850 or so billion dollars. Once they started pumping money into the system, because again, the economy demanded a bigger dose of stimulus, 85 billion were printed, quote unquote, printed per month. We multiply that by 12, and it's roughly 1 trillion per year. So essentially more in 1 year than had existed after almost 100 years of central banking. We went from 800 or so, $850 billion as a monetary base to right now, we are at about 3.8 trillion. What I am afraid of is that, of course, we're going to have another panic. We're going to have another crash. People are going to be afraid, and the same narrative is going to be pushed, because if you're the head of a government and or a central bank, the last thing you want in this world is to be that guy, the guy under whom it all comes crashing down. So they have every incentive in the world to want to kick the can down the road for another business cycle. So more likely than not, they will be doing more of the same. Maybe in the US, they're going to say, hey, don't worry about it. We're going to lower interest rates to negative 1%. And instead of printing 85 billion per year, we're going to do 200 billion per month. Sorry, we're going to do 200 billion per month. If the market accepts this, then of course we're good to go for another business cycle. But I would assert that things are already so ridiculous that there is a higher and higher likelihood that eventually, or even next time, the market is going to say no. And it's that no I'm afraid of, or better said, the narrative change it brings, because we're going to move on from saying, yeah, we are in trouble, but don't worry, governments and central banks will bail us out, to asking ourselves who exactly can bail out governments and central banks. And that is, in my opinion, the elephant in the room. Why worry now? Well, first of all, we do have this argument I've made, our dependence on financial stimulus, on occasional injections of capital into the system. So that's one. Two, the current state of interest rates. I've mentioned the dot-com bubble. From the dot-com bubble to the Great Recession, at least interest rates got a chance to normalize. They climbed back up after they were reduced to 1%. Not again to 6.5, but they climbed to 5.25%, which is decent. Right now, on the other hand, you look at interest rates in the United States, and here we are 10 years into this, over 10 years into this, they are nowhere near normalization. And if you look what's happening here in the European Union or in Japan, things are even worse. So unfortunately, this time, that would be my second argument, there's just not enough ammunition left for central banks. Three, there's the cyclical perspective, because only once has it happened that more time passed between recessions than right now. And if another year goes by without us having a financial crash, it would be a record. So even from a cyclical perspective, we're due or overdue a recession. Argument number four, geopolitical implications. Like, as we're speaking right now, the largest trade war in the history of mankind that I know of, at least, is unfolding, that between China and the United States. Then we have emerging trends of protectionism, and those who know their economics history, they're kind of aware of the fact that when you have many countries embarking on protectionist trajectories, imposing tariffs on others with the intention of boosting their own economy and so on, nothing good tends to happen. So individually, each of these arguments makes perfect sense and represents a valid reason for concern. Together, it's kind of like the cover of my book. Like, you have this guy right here sitting in a boat staring towards the storm clouds that are gathering. And this is, I believe, the situation we find ourselves in right now. From a strictly rational perspective, we cannot help but notice these many pockets of anomaly. And I'm not exactly your average doom and gloomer. So on One Minute Economics, I've kind of made a name for myself precisely as this balanced economist who puts forth, well-researched views and does that in an entertaining way. So I would assert that when someone like myself starts being worried, it makes sense to at least listen.
All right, so really great. I agree with a lot of what you said. So just kind of give the viewer kind of the gist of it. You're like not even usually a doom and gloomer. You're kind of more of a moderate, like I would consider myself on the Austrian side of things when it comes to economics. I'm not really a Keynesian. And a lot of Austrians are more prone to like doom and gloom type thing, but you're just like more of a centrist in that respect, and you're really worried about this. And you laid out the facts right there. Another year will be a record for longest economic expansion. We potentially have trade implications, which could, just multiply already existing problems. We have, almost non-existent interest rates. We've had quantitative easing. We've had all these different things, not even getting into like debt and stuff. So there are a lot of different things going on, that are just not good for, your everyday person. So how does your everyday person protect themselves? Because, it's easy to just talk about it. What should they do? Where should they put their money? I'm more so at this point putting more money into like international stuff, countries with low PE ratios, things that I think are emerging markets. I'm not really putting a lot into the US right now, not because I'm a doom and gloomer, but I think, with all the things you laid out, we're due for a big, big correction. And it just wouldn't make sense to put a lot in right now when you could wait for the big crash, so to speak, and get everything at a extreme discount of whatever is left of the economy. So where do you think people should be putting their money? I mean, be as specific or vague as you want. You could get into, you put 10% here, 20% here, or be as vague as you want too. That's completely fine. Just general. Where do you think people should put their money?
One of the main problems, and it's kind of, we discussed this in the pre-interview, it turns a lot of people away from the idea of financial preparedness. It even discredits it. When you have many gurus who kind of came to the market with prediction after prediction after prediction, and they said, look, I know exactly what's going to happen. I know exactly when it's going to unfold, and here's what you have to do. So essentially their pitch was, I have the exact scenario that's going to unfold. So obviously, if you know what's going to happen, there's no need to prepare for other possibilities. If I know for a fact that, this event is going to happen, I'm just going to position myself accordingly. And obviously, these predictions turned out to be wrong. You had people like, as we've mentioned, like Peter Schiff, who told people to buy gold. As of 2011, he kept telling them, buy gold, buy gold, buy gold. We know how that turned out. And I'm convinced that eventually the market will prove him right in one way or another. But by the time that happens, the people who listen to him will have lost most of their money. And that's kind of the problem. And where I differ from them is that I'm a bit of an anti-guru, so to speak, or I embrace my incompetence when it comes to predicting the future. Not only that, I make it the core pillar of my strategy. So what I essentially like to tell people, you've raised a very valid point with, I think markets are overvalued and so on and so forth. As a trader, it would not surprise me for there to be more upside potential on the table, even in the US markets. And one thing to keep in mind, at one point in this huge craze of financial easing and all that, Japan has always been a poster boy for it. They've always been aggressive in their monetary policy. So aggressive that you had people like Kyle Bass come on television very frequently, make perfectly rational arguments and say, look, Japan is heading for disaster, short Japanese government bonds, short the yen. And they call that trade the Widowmaker because so many people lost money on that trade that it's not even funny. So right off the bat, you have to accept that possibility as well, that the market can just remain ridiculously irrational for an extended period of time. So that's why I kind of try to get my bases covered. And for the launch of my book, I'm going to be on a total of approximately 100 interviews on YouTube, on podcasts, and so on. Interviews on crypto channels, interviews on gold channels, interviews on, all over the place. And one of my main missions kind of is to get people to understand that you don't have to pick a side. Like gold and crypto aren't arch enemies. There are assets that complement one another nicely. Like, to give you a quick example, you're an average family from a country like Syria. You're an engineer, your wife is an accountant. What is your wealth? Your apartment, your car, $10,000 worth of gold and silver, and one Bitcoin that you bought at $20,000, the worst possible price. Disaster strikes, there's a civil war in your country, and you have to, of course, leave together with your family. What happens? Well, your real estate goes to zero. You have to leave it behind. The same way, you're not going to travel with your car for many thousands of kilometers. When it comes to precious metals, they're portable, but the likelihood of having them confiscated at the border or stolen from you is very high because they're physically on your person. When it comes to crypto, you can just leave the country. If you only remember some strings of words, you can have access to your crypto. You don't have to have anything physical on your person. So ironically, the one Bitcoin you overpaid for in December of 2017 might be just the thing that helps you start a new life. So that's an example of a scenario which makes crypto obviously make perfect sense. The same way, however, if we have a fragmentation of the internet, if we lose access to the internet in one way or another, it's still possible to make crypto work, but it would be very difficult. So in that case, of course, I would much rather be holding some physical precious metals. And that's kind of the thing. They complement each other so nicely that you have to have exposure to all of them. So what I do my number one goal, especially since I am the anti-guru essentially, my number one goal is convincing people not to be hooked on my predictions or on one strategy that I spoon feed them. Like if you live in a politically unstable country, I'm not going to be very likely to recommend real estate because maybe you're only a regime change away from having it confiscated. If, however, you live, even what you have over here, decent track record of protecting property rights and maybe some opportunities offline and whatever, I might be far more willing to do it. So essentially what I do in the book, especially in the second part of the book, because of course, part number one is all about, studying economic history, drawing parallels, putting together kind of the right combination of skills to maximize the likelihood that you're going to spot the next financial crisis as early on as possible. But in the second part, I do the opposite. And I say, look, I might be even taken by surprise myself. So it makes sense to dedicate just as much time and energy to becoming more resilient in general. So what I do, I take people one asset class at a time. From, I call them status quo assets, traditional stuff like precious metals, stocks, real estate, whatever, to trailblazer assets, as I call them, or newer stuff, your domain names, cryptocurrencies, peer-to-peer lending, and so on. And essentially, when it comes to each asset, I tell you, look, here is everything I know about the asset class in question. Here are the pros, here are the cons, here's what tends to work, here's what doesn't tend to work. And essentially, after going through the second part of my book, people are going to be able to internalize exactly what they want to invest in and why. So it's going to be kind of deeply ingrained in their subconscious that I, in my situation, want exposure to this asset for this reason, for that reason. I also want exposure to this asset for this reason and that reason. And by having this ingrained in your subconscious, it's kind of going to become second nature to you to be on a continuous shopping spree, because there's a reason why I'm here right now. It would have been far more comfortable for me to wait until there's another financial crisis, because when everyone's panicking, it's far easier to talk to people about financial preparedness. It's far easier for them to empathize with you. Except it doesn't work, because I would much rather be here now when things are calm and when nobody is panicking to tell people, look, it's time now to kind of put together this strategy based on the things I teach you in the book, because it takes time. I have positions, for example, here in my city in Romania, good income producing properties. I cannot just snap my fingers and great, you're now in a real estate position. You have to find those properties. You have to make sure you don't get scammed. You have to close the deal. You have to then work on them a little bit so as to get them back in shape and turn them into income generating properties. It's not simple. When it comes to other assets, it's sometimes more simple, but there's still work involved. There's still positioning involved. There's still timing involved. So kind of that's why you should be giving some meaningful thought to these things now. And by now I mean right after this discussion, because the risk to reward ratio is just so asymmetrically in your favor right now. If you just start doing something meaningful, that it's not even funny if you wait until everyone starts panicking and until it's all doom and gloom on financial news networks. Then you can have the smartest economist in the world by your side, and he won't be able to do that much for you. As I explain on the channel, as I explain in my book, it's not rocket science. These are genuinely things everyone can do. Putting together this plan, executing it, knowing exactly what the pros, the cons are, kind of having everything in your mind. It's so ridiculously easy. It's just that people aren't willing to put in any work. They would much rather listen to a guru who says, no, that's too hard. Just listen to me. I'll tell you exactly what you should prepare for. Just spend all your money on gold. Or it might be comfortable, but very rarely are the solutions which don't involve you venturing out of your comfort zone at least a little bit worth it. So you just have to put in the work.
Um, yeah, I couldn't agree more. You said a lot of really good things. Some things I didn't even think of like as asset classes, like domain names. I mean, I've heard of domain name flipping. But yeah, there's a lot of.
Speaking of domains, like I'm the only economist that I know of, and I'm pretty sure I'm the only economist who studied something very recent, the short domain mania of 2015 to 2016, where kind of like with crypto, you had this huge influx of money from China because the Chinese wanted to move money out of the country, and certain domains that you could have bought for $8, the average registration fee in '09 or
Mhm.
2010, they ended up selling for over $2,000 each towards the end of 2015. And once again, this is the fascinating stuff. This is why I'm so big on economic history, because just like you have people who borrowed money when it comes to the tulip mania, which peaked in 1636 to 1637, among the first people who borrowed money were craftsmen, weavers, who had these looms that were expensive. They used them as collateral and borrowed money to buy tulip bulbs. And the same way I had, when it comes to the short domain mania, I had brokers from China talk to me. And I distinctly remember one of them telling me, man, this is so great. People are getting rich left and right. They're taking out high interest loans in China and buying these domains, and look at how much money they're making. And I asked him, like, I was like, yeah, sure, great, but what happens when prices go down? And
Mm,
I'm pretty sure he never even gave any thought to that possibility. And the same principle was valid when it comes to the tulip mania many hundreds of years ago. And it's just funny. History might not repeat itself, but it certainly does rhyme. And this is why I think there's just a ton of value in being a hands-on economist. I actually did make a bit of money during the mania in question, so fortunately, I can speak from a position of experience and kind of provide some authentic input on that. But yeah, domain names are a legitimate asset class.
right.
Just like with crypto, however, you need to know what you're getting yourself into. You need to understand that in 2018, there are difficulties, the low hanging fruit that people had at their disposal in the 90s or the early 2000s. Obviously, it's a more mature industry. It's less wild west like than the crypto world. But this also means that the return potential is not always as amazing as in the crypto world. It's kind of like this continuous trade off.
Yeah, I couldn't agree more. It's all on like kind of a risk reward scale. I remember like when I one of my first, so to speak, businesses was flipping Instagram and Reddit accounts. And if you look back, I mean, some of these Instagram accounts that aren't even super big are getting a lot of money for sponsored content. You could consider those assets. Reddit is a little bit different. Those aren't as valuable as they once were, but people still buy them. Businesses buy them because they'll, use it for the karma to upvote other things they're putting out there. Kind of use it as advertising to get some more traffic to their site. But so did you want to talk about anything else before we get into like a little bit more into crypto, and then maybe we could wrap it up, or it's up to you?
Oh, we can actually get into crypto because I do believe there's definitely a place for crypto in
Right.
all of this. And my recommendations for people who are in the crypto space, like I do believe that if you make the right choices in crypto, you're going to have an excellent hedge. But please don't forget what happened to precious metals after the Great Recession of '07, '08. So right after that, because initially they sold off. Initially, the market reacted in a negative manner. Eventually, as of a certain point, they went back up into their highs of 2011. And don't be surprised if the same thing happens when it comes to crypto after the next crash. In other words, I would not be the least bit surprised if the initial reaction of the market is negative, because many people expect, oh, no, no, I'm making the right decision. Look, I'm buying Bitcoin. It's such a good hedge. It's supposed to be a hedge against uncertainty. And therefore they expect the market to immediately reward them, and that's not how it works.
Right.
As someone who even trades quite a bit, I can say that markets frequently move in the direction of maximum pain for both buyers and sellers, and therefore one of the main risks when it comes to crypto in the context of the next crash is that people are going to be shaken out by that initial reaction, should there be one. So what I say to people, don't expect the market to automatically
Right.
reward you. Even if you make what proves to be the right decision, it can take a little bit of time until the market digests this news and catches up with you. And also, you have to be careful that something that worked in 2017 or very early 2018 might not work as well after the Great Recession, after the next recession. And I would argue that the next crash might be a good opportunity for us to realize that we can no longer say crypto in a way that encompasses everything. Just like in domains, the short domain mania was limited to just one sector of domains, short domains, because those had appeal in China. The same principle will be valid when it comes to crypto. And of course, if the average person sees banks closing down, or if the average person starts having concerns about the monetary system, he might say, okay, it might be a good moment to buy some Bitcoin, or it might be a good moment to buy some very good altcoin that deserves to exist for various technologically dependent
Right.
reasons. Will the same person say, hey, everything around me is crashing, so why don't I spend all my money on Dentacoin? Probably not.
Right.
So I do believe there is a very reasonable likelihood of a bit of a big divergence to take place, or essentially, I do expect Bitcoin and the best of the best in terms of altcoins, your projects that genuinely put something meaningful on the table, to act as the hedge they're supposed to represent
Right.
against uncertainty in general. And especially, there's a good correlation for that. Banking related uncertainty, like what happened in Cyprus, is a good textbook example, and even monetary related uncertainty. But when it comes to, your average pump and dump altcoins, probably not so much. Like one of my it's not one of my most popular videos, but it's a video that's doing okay, is one about pump and dump schemes. And it's crazy how I have to continuously moderate the comments on that video, because on my video about pump and dump schemes, I continuously have people who promote their pump and dump groups. So
I get it. I get it all the time on my channel, man.
it's
They get through the spam filter, and I've made several videos myself on pump and dumps, and what they're about and how to avoid them, and potentially not even getting into their legality. The fact that if you're trying to orchestrate them, you're part of groups. You're getting into legal. You're getting on that line.
that's not even exactly
So
exactly.
I've told people, avoid these super low market cap coins that people are just trying to pump up to get people on the radar, and then they dump it on you. I've you know I've always said, like, when it comes to cryptocurrency, I'm a huge believer. I run a channel about it. I was an early investor in many cryptocurrencies. I've even made money on good ICOs. But is there junk out there? Of course. I mean, I don't know the exact numbers, but I don't think every altcoin's going to be around 10 years from now.
Yeah, I mean, if you look on Coin Market Cap, there are how many? Over
Thousands.
over 1,600, I think,
Yeah,
last time I checked,
thousands.
altcoins. Yeah. So is there room for all of them? Is there, like, meaningful technological development to be had for all of those 1,600
No.
projects? Probably not. Come
I
on.
mean, yeah, I've said, like, I guess my number, I've figured about maybe 10 to 20% on the high side. But a lot of these coins that are just total trash, they don't really have any real utility value. They're not added. Some of them are just rehashed versions of other coins. They're just the same idea. Oh, we'll tweak this, we'll use a different hashing algorithm, whatever. It's not
Yeah,
anything meaningful.
and the thing is, people are still kind of doing it because they've been rewarded for bad investment behavior in the past. Like, under normal circumstances, it's not necessarily wise to invest in such projects or whatever, but a lot of people have made a lot of money doing so. And then you have the exact same people who ended up losing a lot of money because they expected something that worked in 2017 or very early in this year to continue working. So, of course, bouts of irrationality are bound to occur in any market, but it's on you as an investor to adapt. And I think the time for pump and dump type, altcoins that bring zero value and are just, promoted by specialized groups, and then you're left holding the bag. I think the era of them is quite close to dawning.
They're on their last legs,
Yeah.
I would say. So yeah, we covered a lot. Did you want to tell people where they could find your book, where they could find your channel, give a final I guess, piece on this, and we'll wrap this
Yeah,
up, man.
sure. Sure. Like, I tell people that I do have this luxury of writing books and doing YouTube from a position of, let's say, financial comfort. Like, I don't depend on this income to pay the bills. So to kind of put my money where my mouth is, you're going to be releasing this during my promo week. So from the 6th of August to the 12th of August. And during that week, the price of the book, and it's like, I joke with people that you can work out your biceps with it if you make a goal out of it. The price of this book is going to be 99 cents. And essentially, I'm giving it away and telling people, look, I'm giving it away, and you're just, 99 cents is a symbolic way of having some skin in the game, of having, some motivation to say, okay, I'm invested in this. I want to read this. I want to take this seriously. And two, also, thanks to my channel, I had this luxury of being able to contact sponsors to put together a contest. And through the contest, I basically, anyone can take part. If you have a Facebook account or a Twitter, you can just spread the word about my book, and I reward people for doing that. The first prize is huge for a book contest. It's 1 Bitcoin. The second prize is 1 Ether plus 1 Litecoin. Then I have 8 hardware wallets, $100 Amazon gift cards, domain and hosting packages, just a ton of prizes for pretty much everyone. So by the time this video goes out, you can just go to 1minuteeconomics.com to read the full rules in text form, or check out my channel, youtube.com/1 Minute Economics, for the video with details and whatnot. I kind of do this for two reasons. Like, as an entrepreneur, I know that even when you're selling ideas, you're still selling something. So I never agree with people in the education space who say, oh, my audience is so spoiled, they binge watch Netflix all day instead of learning. That's not a good strategy. If you want to do education properly, you have to think outside the box. You need to get people's attention. You need to keep people's attention. So that's why I'm kind of so out there on so many interviews now, why I'm even having a contest and whatnot. If people don't find out you exist, then it's all in vain, because they're never going to be exposed to your ideas. And also, two, we've talked about some pretty gloomy stuff, but I do want to make it clear, especially through the contest, that my book launch is not a funeral. So, of course, these are serious things, and it's not a laughing matter. Families are going to be financially devastated. You're going to have friends and people who are close to you. You're going to see them lose their jobs and be depressed. It's not going to be a pretty sight, and there's really nothing you can do to stop it. What you can, however, do is position yourself so as to land on your feet. So with that stated, there is zero value in being depressed or going in panic mode or whatever. So essentially, I think a good closing message would be, look, be a positive person, be optimistic in life. I'm all for that. But when making plans, it's usually, I've found, wise to err on the side of pessimism. So if people can just basically internalize that, if they buy the book, perfect. I hope they've put it to good use. If they subscribe to my channel, I am more than happy to have them. But even if their solution in no way includes me, I would consider the victory if they would just do something. What that something is entirely up to them. But I'd consider it a huge victory if they even spend 1 minute, no pun intended, thinking about the things we've discussed today. And in and of itself, just that willingness to do anything at all that has to do with financial preparedness, especially at this stage in the game, I think you're going to be a pretty happy camper if you kind of have listened and internalized the things we've discussed today.
Yeah, man, I couldn't agree more. So I guess we're gonna wrap this up. It's been great talking to you. Again, if you want to check him out, he's over on his YouTube channel. I'll put anything in the description, all the links if you want to grab his book. We'll be in touch, man. It's been great talking to you, and I will see you next time. Peace out.
Perfect. Have a great day, guys. Take care.